1 2 1 2. Can you hear me? Can you hear me? 1 2 1 2.
Loud and clear.
Hello, hello.
Hello, Thomas.
Welcome back.
Thank you. How are you?
Not too bad. Had a good lunch. Now getting ready for CPI.
Sounds good. I'm going to finish my lunch.
Enjoy.
Thank you.
Good afternoon.
Hello, hello. Good afternoon. So, today we have CPI. Quick check. Can you see my TradingView and MetaTrader?
Yes.
Awesome. Okay, so as you can see on the chart, gold is still moving sideways in the consolidation. Yields started to increase a little bit, especially the 2-year, which is on the short end. It's gone up from 3.7 to 3.77, so it's a 0.07 percentage increase. Not too much, but was enough to push out gold from this consolidation a little bit to the downside. Now, we don't know what the data is going to be, but it's the same as every single month. If we have a hotter than expected CPI, then we can expect price to move down on gold because it's inflationary. But if CPI comes out weaker than expected, meaning that it's going to decrease, then gold prices will move back up above 3,400. So it's the same plan as every single month. And currently I do have a sell position. I had 2 sell positions, one of them got closed down, but I'm leaving 1 sell position. And looking at the forecast, you can see that analysts are expecting a slight increase both on core CPI and headline CPI. So on the core level, 3%, and on the headline level 2.8%. We had the discussion whether it's contributed to the tariffs. If you look at the previous CPI data, you can see that inflation started to increase slightly, but in fact the last inflation data was well above the expectations. It was 0.3% higher than the expected on the headline level. And if we have CPI today pushing up above 3% on the headline level, we can see gold prices easily go down to 3,300, which would be 460 pips price move to the downside. What do you think is going to be today's CPI, hotter or not?
Can I ask you a question for Thomas?
Sure.
The question is, you're talking about core CPI or CPI, just about they said headline? Headline is the CPI or the core CPI?
So the core CPI, you can see in the economic calendar, it's the core CPI. So the one that excludes food and energy, and the headline is just the CPI itself.
Okay.
CPI year on year, CPI month on month. Usually the headline CPI is what most people look at because it has more volatility, because it includes food and energy. But in my opinion, core CPI important as well. So we need to look at both of them. And if any of them has significantly higher or lower increase, the market is going to pick up on that one.
Thank you very much. I appreciate
If it makes sense.
It makes sense. Thank you.
Surprise is a surprise, doesn't matter which data. And if you look at the analysis, what I sent out for the members, I didn't discuss the inline probability or scenario. So this was the analysis I sent out just about a few minutes ago for the team, but we discussed this in the morning. So if you have Fortress CPI, core level maybe 0.4, headline 0.3, or goes above 3%, then gold is definitely going to melt along with indices, but it's going to be beneficial for the dollar. If CPI comes out significantly less than expected, so it goes back to 2.6, 2.5%, then gold is going to go up.
Good afternoon, Thomas.
Hey Dorothy, how you doing?
Good. Does someone want to interrupt?
You never interrupt. So people asking about what's the plan for CPI. It's on the screen, guys. So I already did the scenario analysis for the team. And just to recap, I can only echo what I said in the last few minutes. If CPI comes out weaker than expected, I'm buying gold. If CPI comes out hotter than expected, I'm selling gold. And right now I'm in a sell on gold. You can see that's the current position I have, and I intend to keep one position. And in fact, I'm very leaning towards to add back another sell position, which I closed down
Thomas,
a few minutes.
What screen? I can only see you, by the way.
Oh,
As lovely as you are, I can only see you. Or is it
really?
me? I don't know. Yeah.
What about the... Can you guys see my
What about?
trading view?
I can't. No. I can see you looking at your screen.
Well, I can see trading view and Stratum.
You can see it.
Must be me. Okay.
Can you guys see both of my screens? Quick check. Can you see my screens?
Yes, I can.
Okay.
Oh my geez. Everybody just enjoying. I am.
Okay. I think it's on the issues on your end, Dorothy.
Yeah, I'm having a look.
I don't think you mind seeing only me.
Yeah, not too bad.
There you go. What do you think? CPI today, hotter or cooler?
I think it's going to be higher, maybe 0.2%.
Me too.
I'm gonna log out and log back in. I think something wrong with them. I can see them when I go to Discord, but then very tiny. I can see your screens, but okay, I'm gonna go out and come back in.
Sure.
perfect.
Can you see me now, or the chart?
I can see you and your charts. I'm
Brilliant.
happy now.
So Manish is asking how much time until CPI? 20 minutes. About 20 minutes, yeah. And you can see the game plan on the chart. I'm trading only gold today. So people who just join, I went through the analysis quite a few times. If we have weaker CPI today, meaning that it goes back below 2.7 on the core and below 2.5 on the headline, gold is going to shoot up to 2400 easily. But if CPI comes out hotter than expected, especially on the headline level above 3%, gold will melt. I do have a sell position, and I'm expecting higher CPI today. And the effect on Bitcoin is the opposite as on gold. So if you're interested, I did send out the analysis already for the members. You can see in this outlay. If you want to get analysis every day before important events, go to alphafx.eu and join the club. My bias is sell today on gold.
Mr. Thomas? Hello?
He might be AFK, I think.
Okay.
Yes, it's a sell.
Mr. Thomas, can I ask you one more question?
Sure.
You're already in sell position, but if the inflation, core inflation is high, you may enter one more sells or you keep yourself just?
Yeah, it depends. So if the data is significantly high, CPI comes out higher than expected significantly, then yes, I'm going to double up my position.
Okay.
But if it's weaker than expected, significantly, I get closed out from my position, or I close it down manually, and I'm going to switch into a buy.
Okay, great. Thank you.
You're welcome. Of course, we don't know what the data is going to be, but we have an expectation based on previous data. For example, many of you saw this chart already over the years. I'm following every single CPI for the past 4 years. I'm documenting every single CPI for the past 4 years. And only 2 occasions where price didn't react as it should have. But 99% of the cases, it's always the same for gold for the last 4 years. That's my position. I do have a sell, and I would like to add another sell, but I'm going to wait for the data. So that's my position. I'm in a sell. I'm expecting higher CPI today. Coffee trips, comes a question. A little confused here. If inflation is bad for the dollar, wouldn't gold go up? I would think auto CPI would cause gold to go up. Not in this case, because you need to look at the current monetary policy and the economy as a whole. So if inflation is bad for the dollar, that means inflation is going to be weaker, because weaker inflation is going to be bad for the dollar. Hotter CPI or hotter inflation is good for the dollar because the yields will stay higher for longer. And if the yields higher for longer, that means that the government bonds, the US Treasury bond yields, are going to stay elevated, which means that investors are going to prefer to invest in US government bonds. But that, in fact, is bad for the gold because, you know, gold doesn't bear any interest. So that's the logic and the market dynamics behind it. And you can, if you look at the fixed income market, yields already started ticking up a little bit on the short end. So if you look at the screen, the white line represents the 2-year Treasury yield. And slight increase today, not too much, but I think the bond market or fixed income traders expecting slight increase as well, which is going to be bad for gold, bullish for dollar, bad for indices. Until this is FX, don't lose any hope. If you're doing it only for 4 years, you only just started learning and experiencing what trading is. Not everyone is going to be successful in trading after 4 years. Some people luckier or have more education. They understand it quicker than others. They can live off, after 1 or 2 years. But most of the people takes years and years of studying and, trial and error. So don't lose hope.
Afternoon, Tomasz. Welcome back.
Hello, Kai. Welcome back.
All right.
Hey, Kai.
How you doing?
Rafael Macarena, what happens to gold if CPI comes as expected? I won't be trading, but I would expect gold to continue down. And we got 9 minutes left, and I'm in a sell. Yes.
You anticipating hotter inflation, yeah, Tomasz?
Yep.
Okay.
Guys, you keep asking which side of the news is buy or sell. Read the chart. If CPI is weaker than expected, so it's decreasing, then gold is going to go up. If it's higher, it's going to go down. And I'm on the sell side on gold, so I'm expecting higher CPI today. Running in about 39 pips of profit. And actually I'm going to add another sell just now as we speak. Nicholas Mark Simon, yep. You can join the AlphaFX community by going to alphafx.eu. I'm sending the link to the YouTube chat. You can check the prices. If you missed the lifetime offer for £199, I'm sending the link to the YouTube chat because many people did miss it, unfortunately. Just give me a second. Read everything on the website. If you have any questions, just feel free to ask. I do morning briefings on high impact days such as today. Live trading for the most important economic data. Shenzhou, should we sell now? Depends on your bias. I'm expecting higher CPI today, so I'm in a sell. But if it comes out weaker, I will switch into a buy. Gold started moving down a little bit. Looking at the yields. Hasn't changed too much on the short end. No, it did. 2-year yields are going up. Which is bearish for gold. You can see the yields. 2-year is now at 3.79. That's why gold price is a little bit lower now. If you look at the consolidation, the red box, price already started moving down, and I have 2 sell positions. We got 4 minutes and 50 seconds left. My bias is a sell. So the economics behind CPI and gold is if CPI comes out higher than expected, for example, it goes above 3% on the headline CPI, it's bearish for gold prices, because when inflation is higher, the Fed is going to hold interest rate higher for longer. Therefore, the Fed funds rate will be higher, yields going to be higher, and investors will going to turn into fixed income assets rather than buying gold. But if CPI comes out weaker, then the Fed is going to be under pressure to cut interest rate. And if they cut interest rates, then it's going to be beneficial for gold. I've got 3 minutes and 27 seconds. And we got 2 minutes and 40 seconds. Looking at the positions, gold is pushing down nicely. Yields are going up on the short end. Fixed income market is expecting higher inflation, and that is bearish for gold. And we got 2 minutes left. You got the scenario analysis on the chart if you want this to be delivered before high impact events. And if you want to get a full scenario analysis, go to alphafx.eu. This is the private Discord for members. And I already sent out my position before I came on the stream. Once again, if we have weaker CPI today, then my positions will get stopped out and price of gold will go up to 3,400. Welcome to the team, Nicholas. And we got 1 minute left. Once again, if CPI is lower than expected, my positions will become invalid and price will shoot up to 3,400. But if CPI comes out as I expect higher, then gold will sell all the way down to 3,300. 40 seconds.
$15.
And we got 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. CPI is out. It's actually on the core level it's higher, but the headline is lower or in line with expectation. So it's a mixed data, unfortunately. I'm gonna hold the sells because the core is higher. Mixed data, so it's now up to the market to see how do they interpret. In my opinion, it's inflationary because, you know, food and energy is going up, which is the two most important thing for families and households. I'm gonna stick to the sells. Let's have a look on the data. Yeah, core CPI is definitely higher. Headline CPI stayed the same. So now it's up to the market. How do they interpret? I think the core is more important. Both buys and sells are valid because we have mixed data. But I think it's a buy then use and sell effect type of scenario. Headline came out in line with expectation, but core CPI is significantly higher.
You say this indicates sticky inflation, Thomas?
Yep. I would say I'm gonna add one more sell. And that is for me today.
Yeah, the interest rate probably has changed.
Yeah. Let's have a look on the yields.
We're down to 82% probability. What, a 25 basis point cut?
Yep, definitely short-end yields went up a little bit. So I'm gonna hold on to the sells.
Today, I'm looking at the yields and they're dropping. The 2-year and the 10-year.
It did drop, yes. Coifin hasn't updated too fast, but on MetaTrader you can see that the short end dropped, 10-year dropped. But again, we had a mixed data with headline inflation stayed the same, but core increased. So it's really mixed data, guys. It's up to you now where and what is your bias. So you need to decide. My bias remains the same, that I think it's inflationary, especially if the core has increased, because, you know, food and energy. But we need to look into what caused the increase in prices. Mixed data. Personally, I think it's buy the news and sell the effect type of scenario.
DJ had nice big move outside.
Yep, gold started to pull back. Try to find information what caused the change. Yep, gold is still in the consolidation. Mixed data is the worst.
So it looks like it's rising food cost driven by labour shortages and additional costs from trade policies. Just mainly tariffs that are affecting everything, really. Mainly food prices and apparel, recreation, and education.
Thank you, Kai. So if food prices are going up, everything else is going to go up. So I'm holding the sells.
Yeah, pretty much everything. Furniture, toys, appliances, auto parts.
Can you guys hit the like button on YouTube?
And indeed.
Yes.
Oh, not you, the people watching on YouTube. Mustafa asking we should buy or sell. I'm in a sell, brother, because my bias tells me to sell. I interpret this CPI data as inflationary, but it was mixed, so it all comes down to your view.
I think the big, yeah.
What we can do is just wait and hold the position. If dollar is strengthening, that means yields are going up as well. That's going to be bearish for the dollar.
Bearish for gold or dollar.
Yeah.
I mean, the initial reaction is bearish on yields and dollar. We'll wait and see.
Yeah, but the data was mixed, so initial can be very misleading by the new sell effect or vice versa. Okay, now
Well,
I'm in £18 profit, £60 profit.
Yeah, Tamash, what's your opinion on the cheeky tariffs that US put on Switzerland? That will obviously affect gold. with the 1 kilo bars as well.
They're not going to tariff the gold bars, but you know it's all strategic, so they want something. That's why they try to negotiate with higher tariffs.
Do you know what they want?
I don't. Maybe Toblerone chocolates.
Maybe some free Rolexes?
Yep. Okay, I'm gonna pop out to the toilet for a second.
Ox is about to make an all-time high. I think it actually has, yeah. Yeah, new all-time high for now.
Very slow day.
Bastard. Yeah, Nasdaq just hit all-time high, Thomas.
Really?
Yeah.
Well, shame I didn't trade it.
But that, well, in hindsight, it should boost your confidence for sales on gold.
Yep, because of risk on.
Yeah. I'm still holding my 32.95 position from the other week.
On gold.
Yeah, on
Very
gold,
nice.
yeah. I'm still targeting those all-time highs.
Oh, I hate this mixed news.
Right, we got PPI on Thursday.
Yep, hopefully that's gonna do the trick. Minus 800 pounds. So yeah, looking at the data, fairly mixed. Unfortunately, it is what it is. I'm gonna hold the sells, but you know, both buys and sells are correct. Depends on the market expectations. So I did my best. I'm gonna stick to my bias because I think the higher core prices are inflationary in the longer term. Hopefully New York is going to bring some more volatility and volume. All I can do is just wait now. It is mixed, but in my interpretation, you know, this data is inflationary. Nasdaq is pushing higher, so if there's a risk on sentiment in the market, that should be also bearish for gold. Yep, I'm gonna hold on to the sells on gold. Okay, guys, I'm gonna call it today because price is still consolidating. So now just waiting, you know, for the New York Open. Good luck for today, and we are going to trade with the members. I think tomorrow and Thursday as well, and Friday.
Tomorrow was news.
I don't think there's any news, but we can do a New York session opening trade.
Okay, sounds good.
Okay, thank you so much, guys.
Thank you, Thomas.
All right, thank you.
See you.
Have a good day.
Thanks,
I
Thomas.
see you.
Take care.
Bye-bye.
Bye. And those of you who are interested to join the community, you can go to alphafx.eu and use the link in the YouTube chat. I'm going to pin it, and you can get a discount. So it's already pinned now, and you can join for £199 to get the same level of macroeconomic analysis. Thank you so much. Have a final look on the position. Still prices in the consolidation, but I'm going to hold the sells. Thank you so much. This is the Alpha FX.